Hi there, welcome to Grain TV. It's Thursday, December 8th, a really down day in soybeans. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn gave up 3 3/4, beans off 23.5, and wheat turning the tide higher, gaining 7 3/4 cents. Let's start first with the news that drove the wheat market, and that was some news out of India, where the parliament there has said they are going to eliminate the wheat import duty. It's a protectionary measure because they are a large producer of wheat and they have always tried to protect their industry. But several years now running of poor crops have led them to reduce or actually eliminate their wheat import duty, and that has got some people thinking there will be a lot more trade going on. Already so far year to date, India has bought about 3 million metric tons, which is what USDA had pegged for them for the entire marketing year. So that got the wheat market turned around. Also adding some stimulus was news that Saudi Arabia was in the market for a 715,000 metric ton deal, and a smaller deal out of Ethiopia was being sought for 70,000 metric tons. That really sort of set the stage for wheat, but really the big driver was corn and beans, and especially beans to the downside. News out of USDA this morning. We'll get to the full weekly export sales report, but we did have another round of flash sales this morning. First of all, 332,000 metric tons of corn to South Korea. That's on top of the earlier week's announcement of 260,000. So a good week for corn in terms of flash sales. Beans also coming in with another 136,000 metric tons being sold to unknown destinations. But overall, the market just really couldn't lose the fact that Brazil's crop is looking very favorable, and that has got the market sort of on a defensive tone here, as their growing conditions in Brazil are very favorable. On the other hand, China is starting to switch, even though they are still buying some beans from the U.S. The bulk of their volume is starting to move to South America, as premiums that in the U.S. continue to rise relative to South American origins. But in Argentina, there is some lingering concerns about drought. It's been sort of drying up there in the last week or so. The marls are beginning dry, and meteorologists are suggesting that the next few weeks will be fairly important in terms of crop development. The crop there in Argentina has about 1 week of reserve left before it gets seriously dry to have some impact on production, and they think sometime around December 15th we need to see a fairly significant improvement in the weather outlook. The temperatures are expected to get hotter. The rain potential is a little bit limited right now, but obviously long-term weather models are not always precise. So anyway, it's not something the market really focused on today, but I think it's something that could turn things around if we did see some heat and dryness in the second half of December in Argentina. Let's take a look at weekly export sales. These across the board were all better than expected. Corn in particular coming in very strong at 1.495 million metric tons, well above expectations. It ranged from 700 to 1.0 million metric tons. Beans also a very sizable number for the week, 1.4, and wheat even coming in above expectations, albeit just slightly at 500,000 metric tons. So overall, these numbers were supported. We had flash sales, but the market has had a big run up, especially in beans, in the last week or so. And so I think today was really sort of a reality check that there is ample supplies, there is good growing prospects in South America, and so it's really hard to see any sort of leg up that has any sort of prolonged rally in it. And I think today was a reminder of that as we pulse substantially lower in beans. Corn dragging lower mostly in sympathy, but even so, any sort of rally seems to be primed for selling in the market. Let's take a look at the trading charts here from Grain Edge's trading platform. These are daily charts, and what we can see, again, we continue to talk about this overhead resistance around the 360 mark on March corn. Like we said, a few days ago, we actually got through that, but we're not able to close above it, and we warned that that might be a potential negative factor, and it has turned us lower, although we did manage to close off of the lows, closing around 354 versus lows that were in the low 350 range. On the other hand, January beans was pretty much downhill all day long, closing down around the 1020 mark. Now, keep in mind, this is sort of setting the stage for a big test around 1022 versus 1020, somewhere in that area. That seems to be the underlying support, and so it'll be interesting to see what tomorrow brings. Keep in mind that tomorrow is the USDA crop report. There's not much expected in terms of revisions in these numbers. Nonetheless, the market can certainly change dramatically, even with somewhat benign trade numbers from USDA. So watch for tomorrow. Report around 11 o'clock Central Time. It will have, excuse me, some potential to change the direction of this market. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, visit us online at grainhedge.com and take a demo of our trading platform. Have a great day. As a Grain Edge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.